You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central, 1 p.m. Eastern. Do you know where volatility is? Well, let's find it together. It is time for Volatility Views. My name is Mark Longo from the Options Insider.com, as well as, of course, from the ever-compelling, at least we hope so, Options Insider Radio Network. Reminding you, if you like what you hear, this show, anything else we do throughout the week, pretty much close to a dozen programs hitting you all the time here on the network. Make sure you keep rating and reviewing wherever you do find this content. It really does help, particularly now in these crazy, tumultuous times out there where people are looking hither and yon for sources of information on these markets. Of course, keep those questions and comments coming, too. We do love to hear from all of you folks out there. Let's see who we're hearing from on the old program today. First, I'm pleased to say we're going back out across the pond in the MIAX hot seat. I'm happy to say we are joined once again by the Spikes father himself, waking up bright and early to join us on the program today, Mr. Simon Ho, the CEO over there at T3 Index and the creator of a product we talked about once or twice here on the show called Spikes. Simon, welcome back to Volatility Views, sir.
Oh, thank you very much for having me, Matt. Wonderful.
Happy to have you on as well. And also joining us, holding down the Matrix hot seat this week, the Oracle of New Hampshire, the creator of all the cool earnings data you folks devour all the time, particularly this time of year, earnings season. None other than Mr. Matt Amberson, the founder over there at ORCL, a.k.a. Options Research and Technology Services. Mr. Matt, welcome back to Volatility Views to you as well, sir.
It's great to be on, and I've worked with Matrix for a long time, so it's great to be representing them. Of course, being here with Mark again and Simon, it's great. And I was on my podcast of choice and did a search for options, and it's all the Option Insider Network. So it's great to be here with you and the Option Insider Network, Mark.
We dominate the space, sir. That's a nice thing about having created the first ever options podcast. It kind of gives you a little street cred in the space here. And of course, last but not least, joining us from the used to be snowy, then it's warm again. Who knows what it is right now? Let's find out. He is the greasiest / most Texan of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Lion Capital, by way of a Little John trader thing near you, or actually now it's Robinhood Trader now, I do believe. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. What a day, huh? What a week, and yeah, the sun is shining, and it's a beautiful day here in Texas.
Yes, Texas. Yeah, you're right. What a week, I think, is a good way to encapsulate it. So let's get to it. A little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Volatility Review, the portion of the show where we do just that. We dive deep into the volatility action, the unusual activity, the trades, the trends, the developments that lit up the volatility tape throughout the week and indeed are continuing today. And it's been an interesting week, I think, to put it mildly. You know, this time last week we saw vol a little bit more bid. The market's a little bit more topsy-turvy as a result of all these yield fear concerns coming into this week. It seems like folks have maybe put that a little bit behind them. Markets have mitigated that a little bit. Of course, we have all the good vaccine talk on the horizon there as well. And the combo really seems to be lifting most people's spirits coming into today. Today is one of the few days where the market's a bit mixed, taking a little bit of a break from the endless, nonstop enthusiasm that has been pretty much the rest of the week. Coming into today's show, we're seeing a little bit of red, a little bit of green on the screens today. NASDAQ, as it is wont to do, once again leading the charge, this time to the dark side, off about 1%. S&P off about 0.25%, and the Dow in the other direction, up about 0.5%. Though, as we were talking on the Option Block show yesterday, the Dow of today is such a different beast than it was even a few years ago. The notion that the Dow used to be the sleepy old world index. There's Apple, there's Microsoft, there's Walmart in there now. It's very much a different beast than when it was just the GE dominated Leviathan that it used to be, like GE and AT&T, and that was kind of your Dow in a nutshell. A little bit of a different beast these days. And of course, all that mostly green on the screen throughout the week means mostly red on the vol screens coming into today's show. Spikes coming into showtime was a little bit shy of the 22 handle, about 21 3/4, puts it down about 6 points from our last show. Yield VIX cash a little bit lighter, down to about 21 1/4 when we kicked off the show. That puts it down about exactly 6 points as well from where we were this time last week. And VVIX, the vol of vol, was at around a little bit north of 120, about 125 on our last show, coming into today's show at about a 112, puts it down about 13 points. That's down quite a bit, but there's a limit to how low VVIX can get when the vol is moving. I mean, you can't argue that vol isn't moving right now. It may be declining and decreasing, but that's still movement at the end of the day. So a lot of stuff to analyze, a lot of stuff to parse. Let's go around the horn the way we started. Let's start all the way out there across the pond. Mr. Simon, a lot's been lighting it up in the world of vol these days. So what has been lighting up your tape, sir?
Well, I suppose... If I may be so bold, I guess I'd like to reference a vol trade that hasn't happened before. So last week, we've been working for quite some time, as you and probably the listeners know, to develop vol products in general. One of the ideas that we settled on was to create a volatility index for Bitcoin, given the prominence that crypto seems to be getting and the extra impact, and lots of people have lots of eyeballs on it. It seemed to make sense to build the first one. So we did. We built it. It's called the T3 BITVOL index. Essentially, it is constructed in a way that's not dissimilar to standard volatility indices. So we use a simple variance swap calculation, and we get the data in real time. And the beauty about this particular market that maybe people from equities don't appreciate is that this is a genuine 24/7, 365 business. It trades all the time, all around the world, and there's basically no break. I think there's a tiny window on a particular Friday at 8 a.m. UTC where everybody can sort of take a little bit of time to sort of reset their computers or whatever, but essentially it's a non-stop market. So the news from us, I suppose, this week was that, we created a brand new asset class where people can trade volatility off of, and we actually managed to execute the first OTC trade. So as a customer did a March expiring 1x2 call spread. The numbers are pretty mad. The strikes are 135 and 150. That's vol. So it's
that's at the money vol in Bitcoin these days, right?
Yeah, exactly. So very proud to have got it done and got a very good reception for it. And we look to expand upon that in the OTC space, but also in the near future we're going to have it hopefully listed as well. So that's the highlight of my week at least.
You and I chatted on the Crypto Rundown not too long ago about the inception of this BITVOL index, and it seemed like at the time this was still in the inception phase. It seemed like it had a little bit of a ways to go before you would actually start disseminating, let alone put up your first trade on it. So I know you said it went up OTC really quickly. Walk us through how did it get to the tradable phase so quickly? How did this happen?
Well, it was really, we had an interested party on the buy side. We worked with, so there's a company you obviously know of and most people would know. It's called LedgerX, which is a crypto exchange in the US, regulated by the CFTC. And they're doing some really great things. And they have there's two parts of that. One of it is the actual exchange and the other is the market making arm. So that's really how we got to be able to get this done, because they make markets in crypto stuff. And even for them, though, this is a departure from the norm, because, as I said, no one's traded BITVOL itself before. Lots of people trading the actual crypto coins themselves. But they stepped up to the plate and they put a price on the package, and the customer did it. So it's a bit of dumb luck, I suppose, but also a lot of hard trying. They have to really push hard to try and get this done, because let's face it, no one's ever done a BITVOL trade until now. And so, it does take someone with a bit of kahunas to do it, and I congratulate them for it. So, it's very exciting.
Yeah, you're right. Every firm is always hesitant to be the first one out of the gate, right? They always want someone else to test the waters before they dive in. So you're right. They deserve a bit of a tip of the cap to being willing to dive in there. And you guys, once again, T3, pioneering some interesting stuff in the vol space. We're going to do a lot more of a deep dive into that on Monday, listeners. On the Crypto Rundown, I'm going to make Simon wake up early. Maybe a little bit less early for the Crypto Rundown. It's a little bit later. For that precise reason, a lot of Aussies used to join us on that program, so it'll be a little bit easier for him there. So we'll get into more of that. Again, it's the first of its kind, listener. We talk about volatility trades here and volatility options trades for an entire hour here on this show, usually. But this is the first time that's been done in the crypto space. Perhaps a sign of some interesting things to come, and also how the mind share and conversation has evolved around crypto. People are interested in slinging the vol now, which is pretty fascinating. Before we roll off really quickly, Mr. Simon, anything lighting up your tape and catching your eye in the world of plain old boring vanilla index vol, sir?
Well, yes, I suppose it's the boringness of it. You look at the VIX term structure and you look at where the actual level of vol is today. It's really quite weird. It's almost like it's a little bit stuck. Not sure whether that's correct, as it should, in that it should be lower or should it be higher. But I guess my inclination is that it has been stuck for a while around this level, and I actually think that we might get a bit of a push down in the next week or so.
Give me a little bit of a preview of your crystal ball pick. Watch out there, Simon. Someone else may jump on that pick as we keep on rolling. Let's go back on out now to the Oracle of New Hampshire. Hey, I'm curious for you, Matt. I know you've been watching the crypto space with a lot of intensity out there. So if you have any thoughts on the first ever crypto vol options trade, really, that we could point to out there, that's kind of a fascinating thing. And then outside of that, what else is lighting up your tape in the overall volatility space these days, sir?
Well, I love it, and I congratulated Simon when I talked to him earlier. But can I ask him a quick question? Does your index use a lot of the strikes, like all of the non-zero bid strikes, or is it more at the money? Simon, could you help me out there?
Yeah, so that's a very good question. So we don't go all the way down to zero, but we try and capture as much as we can. And as it turns out, there is a plethora of of data and strikes, and they've got all sorts of really interesting stuff in the crypto space, which frankly until recently I wasn't that aware of it. Wasn't really my sort of bag. But yeah, so we use most of them. As I mentioned, we use what's called a simple variance swap methodology. It's kind of the very best thing that you can use. And yeah, so we use quite a lot of strikes, and they've got weekly strikes, they've got daily strikes and monthly strikes. So there's quite a lot of information that you can actually absorb from that market, which surprised me when I first looked at it.
Yeah, very cool. So, the historical volatility, this is 10-day volatility over the last few weeks has been as high as 166 and kind of as low as 40. So it's a volatility of the volatility. I'm interested because, one of the things that has been catching my eye, Mark, is, and I was quoted in it with, is the VIX a bubble, in a Reuters commentary. And I was saying that one of the reasons that the VIX is high relative to what we would consider normal volatility levels is the extreme bid in the calls and even the puts. So there's a lot of people thinking that this market's in a bubble, buying puts, and there's a lot of people that are having to either hedge or follow this retail change of skew dynamic that we've been seeing. So there's quite a bit of curvature in the VIX, and what that does is it brings up the wings, and that raises the volatility of the wings and raises the level of the VIX. And so what I was actually looking at was in terms of realized volatility of the S&P options versus actual volatility, that relationship is not that high of the at the money. It's just what I think is driving it a lot is this curvature. So I was curious how the cryptos were being measured, because they have a big skew to the calls as well. But this market is just going up and up and up, and we're just printing more and more money, and more and more retail investors are coming in. We have international clients. I'm waiting to get my $1 million in Bolivar from Venezuela, which is now worth 50 cents, and wondering, if that's ever going to come to the United States, because it just seems like we're just puffing everything up, and the market just is floating. I feel like I'm floating, Mark.
It does have that odd air of floatingness. Of course, we were one day removed from the 1-year anniversary of when things really kicked off from a pandemic perspective here in the U.S. Of course, March 11th was the day when the World Health Organization officially declared it a pandemic. And a lot of people that really hit home when the NBA canceled the season. People thought, wow, this thing actually has some teeth to it. Of course, the market had already been roiled up to that point, but has sold off pretty hard that day as well. As one of those few days everyone talks about, the Dow 1,000+ point days. That was one of them out there. So yeah, it was interesting times. VIX closed, I think, north of 50, about 53.5. So a year ago, we were in a very different regime than we are right now. If we had said a year ago, the things you just said, Matt, and the notion that we'd have, north of 500,000 deaths and 30+ million cases and everything else that we've mentioned over the course of the past year. And, oh yeah, and by the way, the indices would be up, 40% from those levels. You people probably would have laughed and said you were insane, yet that is where we find ourselves today, at the very tip of a very frothy and volatile market. Let's go around the horn back to the greasiest of meatball. Mr. Meatball, we'll get into all things regular vol, as I put it, in a second. But I know you've been hanging your hat out in the crypto space for a little while now as well, working with the GVol guys over there. So, A, what are your thoughts on the first real crypto vol options trade? And then B, what else is lighting up your tape in the vol space today, sir?
Yeah, that's really interesting and exciting that you guys were able to get that off. Get the trade up. I'm just kind of in my head thinking about how the market maker was laid off his hedge. I'm assuming they found somebody just to do the straight variance, some sort of variance, or they trade a strip of options against the trade itself. Bitcoin at the money vol is usually hanging around, about VIX levels, about 110 is where that implied volatility runs. So this is not ridiculously out of the money. And, I'm thinking about the customer. What were they hedging? Were they hedging a move in Bitcoin higher or a move in Bitcoin lower? Because, like Bitcoin is a lot like crude in that, it when it moves, and vol will completely explode. So I was just kind of wrapping my head around that. When does this contract expire?
So the contract expires on the March expiry. So the standard expiry for crypto options is the last Friday of the month at 8 a.m. UTC, which is British time. So yeah, they've still got a while to go.
Yeah, that's just fascinating. Without, I know you can't get too deep, but what was I think people want to know, what was the reasoning for the customer wanting to do a trade like this? Why would what's the use case on doing the options on BITVOL? What's the use case there?
Yeah, I think it was more, because we had that index out there, and I was speaking with the folks at Ledger Prime, so the market making arm. Obviously, that was one of the things I needed to do first. Who was going to make a price on it, right? Because the index never existed before, and so you had to get someone who was willing to take a bit of a guess. But they have a counterpart that is a very sophisticated crypto macro firm, and so they really wanted to just get involved and be the first. So it wasn't like there was necessarily a fantastic need to get this done for sure, because obviously it wasn't around before. But when the opportunity came to do it, yeah, they were very very gracious about it, and they were really good. So they did a 1x2, so they bought the 1 and sold the 2. So they're going to make money if it does go up. Some interesting insights that go with that, though. We do a lot of deep dive in terms of the studies of how it behaves, and as was mentioned before, this is a very high vol product. I mean, recently the Ethereum vol was above 200 when the crypto was first getting above 50K. The vol on this thing was humongous, and ETH vol is actually slightly higher. So yeah, there were a lot of moving parts, a lot of things to consider, but they wanted to be the first on any trade in BITVOL, and I was very grateful to take that up.
Interesting stuff, Mr. Meatball. Anything lighten up your tape in the traditional vol landscape this week, sir?
Yeah, I'm continuing to be just in awe of the downside open interest on VIX, the 17s through 24 puts that expire on Wednesday. They still have just massive open interest all over the board on those names. And my understanding is the market makers are short and the street is long. So, I think Simon would be a good source for this, because I know he's a VIX trader. We know all the hot trade on is gamma squeezing. Could we see something like that if we start getting some downside pressure on VIX, with the market making firms as short put as they are on the 20s and the 21s and the 22s? Could we start to see some real downside pressure on the volatility index generated out of options expiration next week? As I think about it, I think it's totally possible. And, especially, triple witching, quadruple witching, which is next Friday, has been pretty bullish the last few quarters. If we start getting ahead of steam in the S&P and the volatility index starts taking a dive, could we create kind of a reverse GameStop and see VIX in VIX terms make a pretty hard move lower toward 19 or 18.
And I had a feeling you were going to bring this up. This has kind of been your pet theory for a couple of weeks now. The great sucking sound of the gamma squeeze sucking VIX back below the 20 strike. This has been kind of Mark's theory for a while here, Simon. I know we've seen it the other way. It's traditionally associated with these upside explosions and these crazy names like Game and others, but it could occur in other places. Again, not traditionally associated with the downside in VIX, but it's an interesting idea. Mr. Simon, what are your thoughts on that, sir?
Well, I mean, I agree 100% with Mark, because I mean, my first comment this morning was that I'm quite surprised. It seems stubbornly bid to me at 21. I know this level is not exactly high, relatively speaking, but yeah, I agree 100% with Mark. I think that there is a real chance that it could flush out, yes, to the downside.
All right, let's keep on rolling. Interesting stuff. That would be interesting. Listeners, are you buying this gamma squeeze to the dark side in VIX? Let us know what you think out there. Let's move on out to all things futures out there. Let's go out to the VIX futures curve, because it has been I think we've talked about it for a while now. Kind of weird. It's been in this strange plateau-ish type shape, and it's still hanging out there, even though the front portion has moved a wee bit since our last show. Come into today's show, we're seeing at the beginning of the show, the March future was a little bit north of a point north of the cash, about 1.1 points. That puts it about over 1.25 points higher. Remember, that actually was at a discount to the cash last week because the cash was whipping all over the place. And the April futures at about 3-point premium to the cash coming into the start of the show. That's, again, about 3 points higher because they were about in line last week as well. So the cash has pretty much settled down is what's that telling you. Of course, you go a little bit farther out. You get past May, and you get back into that plateau landscape of the VIX futures where they hang out from like June pretty much through to the end of the year, right around that 28, up to about 28.5, pretty much down to about 27.90 or so. But in that right around 28 lock pretty much for the rest of the year, which has been fascinating to watch for some time. Mr. Meatball, I know you've been paying attention to this VIX futures curve. It's kind of been like this for a while. It's come in a little bit, but anything catching your eye out there in VIX futures land right now, sir?
Yeah, the slope significantly steepened out in M3 this week. And that's been the big change. We had seen curvature between kind of the VIX and M1 month one. Now we've got it between month one, month two. April is still trading at a nice premium to the cash, but is now trading, a little more within reason relative to March, and is now trading at a pretty steep discount to May. And May, and this is kind of the big change, May, which is M3, is now trading at a nice discount to June. It has me wondering, again, I hate to keep harping on this, but we get a little bit pushed lower in vol. I think we could see that whole curve start to enter normalcy. It was kind of cash that at cash month one had a contango, then it was cash month one, month two. Now we've added the third month, and if we enter the summer doldrums, some back end spreads in June versus July versus August. There is a decent amount of money to be made trading against those if you're patient. That whole back end of the curve is asking to be for time spreads, and frankly, you could talk me into a May June or even an April May at this point, because there is lots of short time spreads out there. Today, I actually set up a bearish trade in May because it's trading at such a huge premium, and you can start to see pressure building on the back end of the months. I think that, this time in, a couple of weeks, we're going to be talking about curve normalization, because it just feels like, maybe that 1 year anniversary is when everyone decided to say fat of vol. And I can tell you that, the SEBO is cheerleading VIX futures dropping because they want people to start using them as a hedge. And they just, outside of a very near dated trade, they haven't been very good for it because vol's been so high. They want those futures back at, 15 or 16.
If your gamma squeeze theory is correct, we could be back there. Let's keep on rolling, see what's going on out there on the vol options frontier. Spikes options, we've been talking for a while about how that big three-way has been dominating the open interest. Looks like they came in and took off the vertical side of that three-way yesterday, actually. So they traded 1,000 of the March 32.5 40 verticals. Looks like they did it for 12 cents. Simon, my read of this was that they obviously still have the 28 put on 1,000 times. That's their big position. This seemed like they were using the vertical to finance that put, and now they took the vertical off while it's pretty much vestigial at this point. Is that your takeaway as well? This was pretty much done to finance that put, sir, that vertical?
Yeah, absolutely. I mean, that's my take on it. Yes, I think, and it's kind of nicely in line with what Mark has been talking about too. So I think it's a good idea.
Well, certainly, given the way things have lined up this week, it's kind of hard to argue with a little bit of downside. And that's pretty meaty downside. The 28 puts, that's pretty beefy out there. Let's see if things are beefy, perhaps meaty, perhaps even, dare I say it, meefy out there in VIX options. I don't think today qualifies from a volume perspective as very meefy. Only about 330,000 contracts on the tape coming into the halfway mark of the show here. The ADV, though, is looking a little bit more robust than it did last week. Remember, we were north of 700,000 a couple of weeks ago. Last week, it got annihilated down to about 630, almost 100,000 contracts came off the ADV. So that was a pretty big cut. They got some of that back this week. It's about 20,000 more, so up to 652,000. So a decently robust week out here in VIX options. Before we start breaking it all down, let's break down where the action is, where the hot sizable positions are in VIX land right now. The top 10 size positions in VIX options. By the way, it costs you about 157,000 contracts to break into the top 10 right now. That's about average. That's not really high nor low, really. That gets you all the way to the March 18 puts. By the way, if you're wondering, there are a whopping 2 calls in the top 10. That's pretty much exactly the same as it was last week. So as the Meatball was alluding to, it's still kind of all puts all the time out there. Number 9, 158,000 of the April 21 puts. Number 8, 167,000 of the March 22 puts. Going to be a lot of puts here, listeners. Number 7, 169,000 of the March 23 puts. Number 6, $1.75 of the March 20 puts. Number 5, our first of 2 calls, also 175,000 of the April 60 strike. Getting some fascination with people out there. You'll see in a second. Number 4, $1.76 of the April 18 puts. Number 3, our second and final call in the top 10, 179,000 of the March 60 calls. So 60 strike. Drawing the eye this week. That's an interesting one. Number 2, 205,000 of the April 22 puts. Number 1 with a small bullet, 22, not quite a BB. Let's go 22. 222,000 of the April 20 puts. Total of about 9.35 million contracts open, about 4.7 million on the puts and about 4.65 million on the calls. So the calls and puts net OI are also neck and neck, which if you know anything about VIX, of course, is fascinating because usually the calls are leading the dance by a considerable margin. Let's go on out here and see what was lighting it up here this week. Today, like I said, not the most active of days, 330,000 contracts on the tape. The top 5 trades out here this week, most active contracts, or I should say today, 27, almost 28,000 of the March 21 puts, about 21,000 of the March 23 puts, 19,000 of the March 25 calls, 18,000 of the April 40 calls, and 17,000 of the March 30. So there are some calls sneaking in there in the top 5 most active trades today. Yesterday, a little bit more paper on the tape, 498,000 contracts on the tape. Yesterday, the most active contract was the April 60 calls, doing about 37,500 contracts. So again, getting back to that 60 strike, that clearly seems to have someone's fascination out there. Number 2, 25, almost 26,000 of the April 22 puts. Number 3, 23,000 of the June 24 puts. Number 4, 21,000 of the April 20 puts. And number 5, 21,500 of the March 22 puts. Going out to Wednesday, 769,000. That was one of the bigger days of the week, but not quite the biggest day. Number 1 trade out there, most active contract, was the April 21 puts, doing 47,000 contracts, followed by the May 42 half calls, 46,000 of those bad boys. Then the first August we've seen in a little while. August, 42 half calls. So again, 42 half strike, also getting some fascination. 42,000 almost exactly of those going up. Number 4, 29, almost 30,000 of the April 60s. Once again, 60 strike, followed by 25, almost 26,000 of the March 60s, all going up the same day. Interesting stuff. Tuesday was the big dog of the week, 845,000 contracts on the tape. The most active contracts were the March 21 and 17 puts, doing 148 and 129,000 contracts respectively, followed by number 3, the March 24 puts, 52,000. Number 4, the March 22 puts, 46,000. And rounding out the top 5 here, actually a call, the March 28 calls, doing 31,000. Monday, a little bit quieter day, 423,000 contracts on the tape. The most active contracts out there, 31,000 of the March 40 calls, 20,000 of the June 95 calls. Getting back to some of those weird farther out call strikes we've talked about before here. June 95 is doing 20,000, listeners. Number 3, 17,000 of the April 22 puts. Number 4, 16,000 of the April 18 puts. And rounding out the top 5, 16K of the April 47 half calls. Mr. Meatball, I know you're watching the VIX options paper out here this week. A lot of interesting stuff. We got the 60 strike trading across the board in April and May. We also have some pretty sizable prints going up on Tuesday on this April, looks like March 21, 17. So a lot of things going up, including the June 95s 20,000 times earlier this week. What caught your eye out here in VIX options this week, sir?
Yeah, well, our friend Russell pointed out that there was a pretty big back spread roll. That was those 35s and 42, those 30s and 42s that traded in May and August. They unwound a May back spread where they were short the 30s, long the 42s, and rolled it back to August, paying a net debit of 16 cents. Tuesday, those March 21s, 92,000 of those went up in one print. Customer bought 92,000 at once for 13 cents, put up on a block. That one caught my eye. We did end up writing about that in the VIX Edge that I put out. Continued downside of Palooza. We've got some active way out upside in June. I noticed that I believe the 105s and 110s are trading today. So we continue to see some of this far out of the money stuff trading, which is a little strange. They don't seem really that interested in the 30s, the 35s, the 40s, the ones that could actually make money. They're interested in these crazy out of the money ones that, I find a little unusual. Again, just continued downside pressure and downside speculation on some of these really cheapy and expensive options. And frankly, right, let's talk about that 92,000. They paid $1 million, about $1.2 million to get long 92,000 of those puts. And, it doesn't really take that much imagination to see the VIX get to 20.5 or 20 by the middle of next week. And a trade like that, from a calculated risk perspective, could net a lot of money in a very short period of time. So that was one that I caught my eye. I continue to be, had my eye on those 20 puts that were offered at a nickel all week. I just thought those were, from a risk reward standpoint, just ridiculously inexpensive, and did in fact do a couple trades on that.
Mr. Matt, I know you watch all things VIX options as well. In fact, you may have a few interesting questions of your own up your sleeve, sir. What's lighting up your tape in VIX options land this week, sir?
Well, I was interested in Mark's comment because I too think that the futures, so high at 28 versus, where VIX is. And I wonder if I could ask Mark a question. If you could represent, instead of just doing a calendar, is there any way that you do like a call spread calendar or a put spread calendar? Obviously, since it's, I usually dealt with single stock options, but now with VIX, you have, different instruments in each one of these months. And so I like to be neutral on units. What would he lean towards? What would you lean towards, a call spread or a put spread calendar, or neither?
I would do, I like your idea. I would be looking at like a put spread, and, you could, and we've done this, buying like a June in the money put and selling a July in the money put against it. So for instance, the June, July 30 put spread, you could do that for potentially a little credit. You could definitely get a credit on the 35s, and something like that basically turns into a future spread. But the advantage of that is if you do the options, you definitely have more limited risk than the flat future, than a straight VIX future spread. So a trade like that, advantage of the steepening curve, one of my favorite trades, and a trade that I've definitely dabbled in over the last few days and weeks.
Yeah, love it. My trade was always just the VIX long put whenever it was in contango. So that was my kind of short 2 weeks out, 40 delta, something like that. Is back tested, very well over the years, and but I can't believe these outer months at 28. That's what boggles my mind, Mark.
Well, some of the trades that make a lot of sense and that I really like are, you can be in the money and out of the money at the same time. And I like these trades in April or May. So for instance, the May trade I did today, buying the 24 puts, selling on a ratio of the 20 puts, and hedging that off with some some 2 cent 17 puts, essentially putting on a butterfly. I'm buying the 24 puts that are $2.5 in the money relative to the cash, and $4 out of the money relative to, or $3.5 out of the money relative to the future. I find those options have by far the most value. In April, yesterday we were looking, you could buy the 25-21 put spread that was $2.35 in the money at the time, and you're essentially selling a 21 put that was out of the money at relative to the cash, and buying a 25 put that's over $3, $3.15 in the money relative to the cash, but both options out of the money. I find that there's a ton of value in setting up spreads along those type of ilk. If you think that we're heading toward a trend of slowing volatility and falling VIX, which I do think we're heading toward.
Well, speaking of falling VIX, you folks like to sling a little bit of VXX when that is happening, and that's been popping off this week. VXX coming into a few minutes goes at about a 14.20, puts it down over a point, nearly a point and a half from where it was this time last show, listeners. So VXX is doing what you pay it to do, which is head on down towards that 10 strike where they're bound to reverse split it again. Shades of GE. Only this reverse split makes a little bit of sense. About 202,000 contracts on the tape today. The ADV is about what it was last week as well, right around 376,000. That's about a couple of thousand contracts difference from last week. Not a huge change. Let's look at the top positions out there in VXX land. Actually, right now it's 70-30 calls to puts out there. So calls losing some of their luster. It was 60-40 last week. Now it is 70-30. So one of the calls bumped out of the top 10. Let's start. Number 10, 33,000 of the March 16 calls. So our first of 3 calls there at number 10. Number 9, another call. 35, almost 36,000 of the March 30 calls. 3-0. Interesting strikes afoot out there. That's going to be challenging. Number 8, 36,000 of the March 13 have puts. Then we got a whole bunch of puts here, listeners. Number 7, 36, almost 37,000 of the March 13 puts. Number 6, 37,000 of the April 15 puts. Number 5, 41, almost 42,000 of the March 16 puts. Number 4, 42K of the March 15 puts. Number 3, 51,000 of the April 14 puts. Number 2, 55,000. That's quite a few of the March 14 puts. But still, it's interesting stuff because number 1, with a bullet yet again out there this week, actually has gained a couple of thousand contracts since last week, are the March 20 calls, 89,000 almost exactly open out there right now. It's a little bit north of 90,000 a couple of weeks ago. So it has come off a little bit over a couple of weeks, but it's gained a few back this week. So the 20 calls continue to dominate the tape out there. Mr. Meatball, I know you and your crazies and your pit chat love to sling a little VXX. What's been lighting up your tape out there this week, sir?
Yeah, when you plug it into our little nifty contango calculator, it's got a negative drag of about 7 cents on it per day. There are implied volatility on these options has really come off. VXX implied volatility, while VVIX is still really high. VXX implied volatility is back toward levels that we used to see pretty regularly pre-pandemic. So there are some inexpensive plays in, some of the near-dated VXX, and with it losing as much as it's losing, I maybe put on some bearish puts in VXX this morning. Just saying. Maybe. Not definitely, but maybe.
Yeah, that's something I have been noticing over the past week or so as well. That definitely that vol has come in quite a bit. I may have a little bit of VXX downside in my back pocket as well, which again, a week like this, it's kind of hard to argue against that one. Let's see what's lighting it up out there today. The big trades, top 5 trades out there today. March 14 half calls actually going out today, 18,000 of those, followed by the March also going out today, 14 puts, 13,000 of those. March expiring on the 12th as well, 11,000 of the 15 calls. Then we go out to the regular March expiring next week, 10,000 of the 14 puts and 8,000 of the 14 calls. So the 14 strike, obviously, drawing a lot of imagination out there. Let's skip off of UVXY this week because I want to get into all things earnings, volatility. We got the Oracle of New Hampshire with us here today. He is the keeper indeed the generator of all the earnings volatility data. You know, Matt, sometimes we get so hung up in all these macro volatility trends. We look past what's going on from a micro, indeed a very fixed earnings volatility perspective. But you and I have been waiting for a long time, since the pandemic kicked off, really, for the moment, the inflection point when earnings volatility would maybe make some rational sense. And perhaps we would see some outperformance from an earnings vol perspective. And yet, pretty much for the entirety of this pandemic era, we have seen the opposite. Vol just annihilated across the board. I thought for a while there, early in this season, that we were shaping up. This was maybe going to be it. This was the time. They had come for the vol enough, and most of these straddles had been hit enough that we seemed like we were poised for some outperformance. And early on, it seemed like maybe I was right. Then the worm immediately turned, Matt. So it does not seem like we are in place for that again. But catch us up, run it down for us. What's this season like? Are we in yet another blood red apocalypse season for vol buyers, sir?
So I'm not sure what this means, but Oracle had a 120% actual move, and it was greater than expected. But that is a complete anomaly, Mark.
Yeah, I saw that one. That got me excited.
Yeah, I hate to be the bearer of bad news, but if you look at the reports that you guys put up that we send over, we graph it. We put the green and then the red on the bottom, and in a sorted column, and it's just blood red most every day. And what that means is the expected earnings move from the straddle. We look at that straddle and we take out the expected straddle afterwards. So we do some fun and games to it, but that's the expected earnings from the straddle versus the actual earnings move. It has been, except for Oracle, pretty poor again, Mark. Not as bad as what we saw earlier in the year, but I hate to be the bearer of bad news, but we're down. We usually get a win ratio of about 40%. We're down to 32%. We usually have an actual versus implied of about 100, 99, 98. We're down at 77%. And whereas our 12 quarters average used to be 99%, it's been so bad this year. We're down. It's dragged the whole average down to 93%. So what that means is this year has been bad for option straddle owners. And there are names out there that that have moved and maybe make some headlines, but for the most part, there's not a whole lot of fun. Nike's coming out. They're expecting. They've actually brought that down pretty good. They're expecting a move of $7.11. It's average, $7.38. What else do we got? So just a lot of those are pretty close to what their averages have been, even in this routing that we've seen, Mark. So yeah, hate to be the bearer of bad news, but the option owners haven't been doing that well in these earnings.
Yeah, you even yanked the rug out from under me, Matt, because in your earnings season report, we actually had 1 week that was over 100%. It was week 4. It was at 101%. And week 3 was pretty close. It was at 99%. So it seemed like there was some hope. But then you've gone back and revised those down. And now week 4 is 99% and week 3 is 95%, Matt. So we have yet another season where not even a single week broke the 100% level, sir. So you're killing me out there.
Yeah, I know. I heard you. What we do is we filter those out by volume. And if a stock falls out of the volume, unfortunately, it comes out of that. So we went under. It is one of the few seasons where you didn't, what we do is we break it down by earnings week. And it's actually pretty interesting to watch because weeks 3 and 4 are usually our strong weeks. And we could usually be buying on week 4. But I teased you, and I apologize for that, Mark.
I blame you, sir. But speaking of the unders, it is time to get to your questions. It is time for the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options. or facebook.com/The Options Insider.
All right, since we're talking about over-unders, let's get to it. Our question of the week out there for you folks. You know, about a month ago, almost exactly, is close to when VIX closed below 20 for the first time, 1997, ever so briefly. So we asked you at that time, hey, 1 month from now, will VIX be above or below 20? You guys overwhelmingly came in, a little about 2/3 saying above 20, only about a third saying below 20. Fast forward about a month, and we're back in that range again. Obviously, above 20 was the right answer last time. But we thought we'd put that question to you again. We're starting to threaten that 20 handle again. Mr. Meatball's talking about the great sucking sound to the south there below 20 with all this gamma. So what do you folks think? Do you think a month from now, will VIX be above or below 20? And so far, it looks like our audience is pretty much almost exactly the same as they were last time. About 2/3 saying above 20 and about a third saying below 20. Mr. Spike's father, you were leaning earlier and kind of hinting at your crystal ball pick coming up, saying might be a little bit lower. You're also saying you kind of believe this gamma suck to the south there for VIX. So what are your thoughts about what our audience is saying? And if you have a vote, have at it, sir.
Oh, I vote firmly the way that I think our panelists are. I think the sucking sound is for real, and yes, definitely going to go below 20.
Interesting. Mr. Meatball, I have a feeling I know where you're leaning on this poll, but what are your thoughts about our audience kind of steadfastly remaining north of 20 a month from now, sir?
Yeah, I mean, it's a recency bias. And as an expert on sucking, I can tell you that I can hear sucking sounds right now and out of the VIX.
I think we'll all agree with you. You are definitely the panel's leading expert on sucking. All right. Mr. Matt, same question for you. What are your thoughts? Meatball's killing me here. What are your thoughts on our panels, or I should say our audience's thoughts, and where are you falling on this, sir? A month from now.
I'm still laughing. So, I was going to say 19.99 is going to end, but I'm going to say 20.01 because just barely above 20, Mark.
Just a mess.
I think this curvature is going to support it.
Well, you were talking earlier about, the farther futures are around at 28. So maybe they'll be the maintenance while it's getting sucked down to the front there. Those futures will steadfastly cling to it and keep it above 20. So far, you folks are saying above 20 a month from now. Get over there at Options, make your voice heard. This will run for a couple days into the weekends to give you folks who listen to the podcast time to vote out there. All right, other questions. Simon, this came in a week or two ago. I wanted to save it for you, though. It came in from Nick's Vix. He wants to know, what is the status of V-Spikes? Is it being disseminated yet? Now, I know Tom and others have said it is being disseminated. You guys are calculating it, but it's all behind the scenes. Nothing available for public consumption yet. So why don't you give our listeners an update on the status of V-Spikes, sir, and maybe when they can expect to have it in their hot little hands?
Yeah, that's a good question. It's one that's top of our mind for sure. We would have hoped that this would have been up quite a while ago. It's just something technical. It's nothing that's major. I would imagine in a couple of weeks' time it should be out and live. I mean, as you know, it is in beta testing and it's functioning exactly as it should. But we want to test it just a little bit longer to make sure that there's sort of no snafus or whatever going on once we launch it.
Yeah, I was going to say, my guess is that the big holdup is they're still not sure on the branding, and they realized the mistake of not going with Viking.
So you're going to bring up Viking again, aren't you? You really want those marketing dollars for the branding purposes of Viking.
He does. No, look, he's got an opinion and he's sticking to it as he should. So maybe that's why it's slow. But yeah, it'll be around. It'll be around in a couple of weeks.
Oh, cool. So we can finally add that to our rotation here on the show. And speaking of rotations, it is time to rotate on that most difficult, that most dangerous of segments. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. Mark and I did the weird thing last week where we kept our predictions from the week before. I don't think I've done that in quite some time. I don't think any of us have collectively as a group just said, let's punt to the week because we missed it terribly last week. Let's punt and keep it this week. And so we kept our predictions from 2 weeks ago coming into this show, which was I was at 24 double. Mr. Meatball was at 22. One of those looks a little bit better than the other. I was a little high at 24 half because coming into the end of the show here, we're seeing spikes right around a 21 half and VIX cash right around a 21. So both of us, even though if you go by the spikes level, Mr. Meatball is at least within a point. So that's nice. Our margin of victory is usually 1/10 of a point, which to our credit, we never changed during the height of the madness of the pandemic. VIX is at 80. Things are slinging all over the place. We kept it within 1/10 of a point. That's how demanding we are here on the show, listeners. But Mr. Meatball is the closer of the two of us, so I will allow him pride of place. He gets to choose. Does he want to go first, or does he want to pick someone else to go first? Have at it, sir.
You know what? Let's let Matt go first. He's we haven't heard from him in a while, and I like putting the pressure on.
There we go. An ignominious honor, Mr. Matt. You are now allowed the pride of place to go first. What are you thinking for this time next week from a VIX cash and a spikes perspective, sir?
Well, I think it's too easy to do it in tenths, so I'm going to go with 100. So I'm going to say 20.01.
You're going for that one as well. Okay. The 20 point. I thought you were saying that was a month from now, but you're going for it this Friday as well. So we're getting there pretty quick. 20.01. There you go. Now, Matt, due to his own request, he has to be within a 100th in order to win. So if it's at 20.03 next week, Matt loses. Just remember that, listeners. He wanted it. That's by his own request. All right, since we're going guests, let's go Mr. Simon next. Mr. Simon, sir, what are you feeling for this time next week?
Sorry, yes, 19 even. That's what I think. 19
even. Oh, getting shy of the 20 hand. Simon, he is putting his money where his mouth is. He says the great sucking sound of VIX will suck it below the 20 handle. Interesting stuff afoot out there. Mr. Meatball, since you were the closer of the two of us last week, I'll allow you to choose. Do you want to go last, or do you want me to go last?
You know what? You're gonna end up being on the high end, so I'm gonna go on the low end. I'll go in front of you. We'll go with the greater of the marks first, and we'll do. I'm gonna go with an 1801. I'm gonna go for the all-time vol suck.
Wow. That's you're going for an annihilation over there. Wow. Some might say the suckier of the marks, but hey, to each their own. It's a very subjective thing. All right. So we've got an 1801, a 19, and a 2001. Quite the range out there. You're right. I'm going to be north of an 1801. I think that's a fairly safe prognostication. The question is, am I going to join the party below the 20 handle or not? And I was just joking with the Rock Lobster on this yesterday, and he was talking about how VIX gets to about 21.60, 21 half, and then it just bounces north all the time, and he's throwing a lot of money away on that 21 put strike in VIX over the past few months. So it does have this flavor to it where it does seem to want to get down here, and then it just fades everybody out. Something crazy happens. Something drives it back north like we saw last week. So that could certainly be in the offing. So that's a long way around to saying I don't think I'm going to go shy of the 20 hand. I'm going to go. I don't want to be this close to Matt, but I kind of have to be. I'm going to go 20.25. So that's our market, listeners. 20.25 for me this time next week, followed by Matt at a very demandingly precise 20.01. Remember, if it's 19.99 or 20.03, he loses. So bear that in mind by his own personal request. I don't make up that rule. And then Simon at a 19 even, and the Meatball coming in at the mother of all suckage, 18.01. All right, everybody. That music means we've come to the end of another volatility journey. Hopefully you think this journey didn't suck. If you have questions or comments or suggestions or products you'd like to see us talk about on the show, hit us up. Let us know. We do love to hear from you folks. But let's see what everyone else is working on. Let's go around the horn. Let's start with Mr. Matt, sir. If folks are interested, they want to check out your earnings data. Maybe they want to check out some of your back testing, all the other things you folks are cooking up over there at ORATS. Where should they go? What should they do, sir?
So I'm reading the Behavioral Investor, and his point is that humans are not set up to be traders. We do things like we trade on our emotions. We do all these things. We talk our book up. I'm not going to say who does that. We do all kinds of stuff like that. So, one of the things that we work on at ORATS is systematic trading. So we have a lot of back testing. We have a paper trading system that you could forward test. You could sign up for a a strategy, and it will trade it for you, just not paper trade it for you, so you can see how it goes. So that's what we're doing over at orats.com, Mark.
Yeah, it's cool stuff. Particularly these days, everyone has questions about how things performs. There are strategies you can do out there outside from buying calls in Tesla and game. So if you want to explore those types of strategies in a little bit more detail, getting beyond the simple stuff, orats.com, ORATS.com. Who doesn't want a back tester in this day and age to see what you're doing? If does it actually work, you can find it out. Orats.com. And Mr. Simon, if folks are intrigued, they want to check out everything over there in Spikes land and maybe also check out a little bit of BITVOL. Where should they go? What should they do?
Yeah, so if you're interested, T3 Index, www.t3index.com is the place to go. It has all that information there and also some contact information if you have any queries.
There you go. T3 Index for all things BITVOL. Now, he has a bunch of other volatility indices over there. You can check them out for yourselves on yield. The Milkshake Index, for those of you interested in dairy volatility, you name the marketplace. He's got a volatility index for it, T3 Index. If you want to dive deep into spikes, of course, it's MIAXoptions.com/spikes. That's the place to go for, of course, all the data, the releases, the historical stuff, including even links to a cool little show called Volatility Views. What more could you ask for? From a volatility-oriented destination, MIAXoptions.com/spikes. And Mr. Meatball, if folks want to hit you up talking about how much you suck, where should they go? What should they do?
Well, I'm sitting here trading on my matrix execution system and looking at BXX and VIX. And if you want to know my insights and how I'm trading, I put out a note on volatility every single trading day. Go to optionpit.com and give us your email, and you can see me talking about the coming suck from the king of suck himself, Mark Sebastian.
Yes, indeed. Check him out, optionpit.com. And if you want to see what he's using over there, Matrix Executions, the place to go is just matrixexecutions.com, the place for execution services and trading technology. Check them out, matrixexecutions.com. Tell them you heard about them on Volatility Views. They will be thrilled, indeed excited. On behalf of everybody over there in Matrix land and MIAX land and Simon and Matt and indeed Mr. Suckage, aka Mr. Meatball, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in your questions and comments, for listening live. This unfortunately concludes our broadcast week here on the Options Insider Radio Network. We'll be back again on Monday to kick it all off with the option block all the way through to Thursday, or excuse me, all the way through to Friday, and another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution in trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.